Hey traders, Mike Sir here. Welcome to my Trade with Mike live stream series where I basically have you follow what I'm seeing in the markets and analyze what's happening in the markets. All right, it's been a crazy volatile week. We've basically been seeing the market become very, very weak, mainly because of a lot of regional banks have a lot of exposure to customers basically doing a bank run. And specifically, the big incident was Silicon Valley Bank. The whole story, and again, I won't go into too much detail here, is essentially they um, they basically are a bank to a lot of tech companies, a lot of biotech companies, and because of um, their clients needing capital to run their business, they've been withdrawing a lot of capital. The biggest issue with that is they've actually put a lot of money into U.S. Treasuries, and they actually put a lot of their money in the treasuries where the interest rates were actually the yields were actually much lower than they are now. So since a lot of the clients are withdrawing their money, they basically have to sell a lot of their U.S. treasuries basically at a loss because they bought a lot. They were quite safe in a sense that they want to put the customers' deposits into U.S. treasuries, which are guaranteed. But because they bought these treasuries at such a low price that due to the interest rates rising, these U.S. treasuries actually have gone up in value. So they actually lost a lot of money on U.S. treasury notes, which is kind of odd thing because U.S. treasuries are a very, very safe investment. And this caused them to lose a lot of money because a lot of the customers were drawing capital and they actually had to try to raise more capital. And once news came out that Silicon Valley Bank was in trouble, a lot of customers were drawing money, so hence there was a bank run, and therefore now basically the U.S. federal government has taken over the bank and guaranteed the deposit. So that's kind of stabilized the market today. So let's get straight into it. All right, so just a normal disclaimer, anything that I discuss is not considered financial advice. Please consult your financial advisor before making financial decisions. All right, let's get straight into it. So, all right, this is the S&P 500, not including today, but essentially since Monday, actually since our last live session last week, we essentially been going straight down, and we are on the S&P below this key 900 level, or 3900 level, pardon me, 3900 level, and we are below that. Today is a green day, so there is some relief. But if we were to look at the moving averages, okay, I talked about this in some of my videos. The 200-day moving average is a good longer term indicator, and we have broken it. Okay, we actually broke. The reason why I said last week that I thought the market would go higher, it bounced off the 200-day, and we were right here last week. Since then, my thoughts have changed, and I've actually changed towards the bearish camp. So I think that markets are going to head lower. And this is not a great environment for swing trading, even though the markets have been basically going straight down. Once I show you some charts of some 5-minute charts, is actually a really good environment to day trade. There's a lot of volatility. Even though you can see the indices are going straight down, throughout intraday there's actually lots of spikes up and then spike down. So it's a good environment in terms of daily taking advantage of the volatility. But swing trading wise, it's not necessarily the best environment unless you were able to get in at much higher prices to short on the downside. So my thoughts are here that since we are below the 200-day right here, we are below this 3900 level here. My thoughts are this market may be in trouble. So let me just remove this. And one thing that I notice here, we can see this wide downward channel. We are below that. So there's a couple of things that lead me to believe technically that the market is very weak. We have broken a lot of structures. So first of all, this downward channel, okay, this Y channel has broken down. Okay, it's below this line. Number one. Number two, this short-term upward trend line has been broken right here. Okay, broke on Thursday. And also we are below this key support level, 3,900. Okay, so as of right now, if you are a trader, the bias is towards the downside. Okay, specifically in the overall markets. And my thoughts are we are going to have a FOMC meeting announcement next week in terms of interest rates. Actually, let's take a look at the calendar. Actually, two things. One is there is going to be inflation data tomorrow, okay, the CPI, and also on Wednesday, the PPI. So these are inflation indicators. If inflation does prove to be going lower, we may have a short-term bounce just because of fears that or the fears of raising interest rates. So if inflation is a lot lower, so the forecast is 6% on the CPI. Previous was 6.4. So if we still can see continuing lower inflation, that could maybe provide a boost to the market. The thing that I'm looking for is next week, Wednesday, March 22nd, we have the FOMC meeting announcement. So there was some thoughts already that the Fed's going to raise interest rates by 25 basis points. But due to what's going on with the financial sector, and again, we'll take a look at the financial sector, there are some big weaknesses, and perhaps Jerome Powell might not raise interest rates just yet due to the weakness in the market. So that could provide a boost, and also the inflation data tomorrow. So it's going to be a very volatile market environment. And if you are a swing trader, my suggestions is if you do trade definitely smaller size, or be very careful in terms of your entries. If not, you want to stay away from this market. The market is definitely going to be volatile. But if you are a day trader, lots of opportunities in this market. All right, let me take a look at the NASDAQ. NASDAQ is also an index that I look at. NASDAQ is consisting a lot of tech stocks, and in some sense, it has a similar type of structure. It actually is a little bit weaker. You can see that the NASDAQ broke right here, and we are still in kind of an uptrend in that regards. But if, again, let me just move some moving averages here. Let's do the 200-day. Again, this is a little bit of a longer term moving average that a lot of people look at. And you can see most likely, yes, it just, well, actually staying above the 200-day. So in fact, it actually is a little bit acting a little bit weak, or a little bit stronger than the S&P. Okay, and my thoughts probably is some of the tech stocks are really keeping this market up. You can actually see the NASDAQ is actually outperforming the S&P, and also outperforming the Dow. The Dow has broken the structure on Thursday. It's been in a really choppy range, and now it's back to look and behold. You know, when I draw these trend lines, they extend out. Lo and behold, it basically reached right here this morning and bounced off that. So it seems like the weakest is actually the S&P 500, which is consistent of the top 500 companies in the U.S. The Dow is top 30, more multinational companies. So yeah, it looks like the S&P is acting the weakest. But if you were to take a look at the Russell 2000, which consists of medium-sized companies, you can see this index is very, very weak. And it's probably because a lot of these companies are smaller companies, so hence smaller companies tend to perform worse in a down market. So you can see broke the structure right here, broke this, and essentially broke this. So and then again, look at this, hit right at support at 1720. Look at this right here. So short term is definitely oversold. Might see a bounce, and that's why we're seeing all the indices bounce today. Okay, except the Russell, but the Russell again bounced off this trend line here. Also, if you guys have any symbols that you want me to review, just make sure that you type them in the question box, and I will go through them with you. All right, so I'm just going to go through all the indices, commodities, also go through some crypto with you guys, give you guys an overview of the overall market. And lo and behold, look at this. Man, all these technicals are working really, really well today. Look at oil basically went back to test the support right here at 72.59. Look at this, drop right here and bounced off. So oil basically is going sideways. It's trading between a range of 72.60 to 82. Okay, so the trading strategy for this is buy here, sell here, buy here, sell here, right? That's what oil is basically trading in a very, very wide range. Natural gas. Okay, natural gas is actually starting to turn up. Okay, natural gas actually performed really, really well 2 weeks ago from a low of 215 to a high of 305. This is basically short covering. Okay, all the people who were short this, okay, were covering. And also it helped with the colder weather. So hence, and also there was a decline in natural gas inventories as well. So we basically had a pullback after this strong move here. And today is actually the first day that it is providing a sense of lows here, higher lows here. So let's see if this level can hold. If this level 250 can hold, looks like this has made a new higher low, and hence we're going to go higher. And a lot of it's going to depend on the supply and also cold weather. It from what I've been kind of reading, the U.S. has been getting some cold front. All right, let's take a look at gold. Gold has finally woken up due to mainly the U.S. dollar. The U.S. dollar has been declining. Gold has been acting very strong, broke support right here, kind of came back and essentially held support right here around 1800. And since the US dollar has been falling, you can see gold has been skyrocketing back. And the main thing, the reason US dollar is declining, that there may be a chance that the Fed will put a pause on raising rates, so hence the US dollar is weakening. So gold broke this level right here, 1858, and ever since then has been going higher. Silver actually has been doing even better. It's up 6.46%. Silver, let me just take a look at the overall bigger time frame chart of silver. Okay, silver, in some sense, is still having, I mean, overall, it's been going up, but it's been basically hitting this level of resistance, and really has to clear 2452 to head even higher, to head towards 30. But if we go back to a daily chart, this is going to be a level of resistance, okay? Right here. So it bounced off 20, the $20 level. If you are looking to get in, wait for some type of a pullback before heading higher, but utilize this 20 as your stop loss, okay, if you were to get in. All right, take a look at the US dollar index. You can see the reason why gold has been going down, US dollar has been going lower. Okay, there's an inverse relationship between gold and the US dollar. All right, going to take a look at Bitcoin. Okay, Bitcoin has had a substantial recovery ever since the fact of news of the bailout of the Silicon Valley Bank and a lot of the regional banks as well. And mainly because I'm not too familiar with a lot of those crypto banks or the banks that actually deal with a lot of crypto companies, but those banks are safe or they're actually going to be bailed out. So hence it's giving a lot more confidence towards the crypto sector. So crypto, I mean, it's incredibly volatile, hit a high 25,000, basically dropped all the way below 20,000, and now within the past 3 days, basically skyrocketed to test this 25,000 level. So looking at the overall technical structure of Bitcoin, it's very, very volatile. Okay, you do not want, if you're looking to buy Bitcoin, you do not want to chase. Okay, you don't want to buy any of these breakouts here. Okay, you always want to buy low and sell high. And what I mean by that, buy low, sell high, buy at support levels. Okay, when it comes back down, look for some level of support. In here, it never really, I mean, there was some support right here, around 19,600, actually 700. Okay, it bounced off. So wait to buy on support, and you can see right here, clear resistance level at 25,500. All right, before I go into any symbols that you guys want me to take a look at, let me review my portfolio from last week. And I'm a little bit disappointed because I was looking to short KB Homes, right? It's this new home builder. And given the overall downward market, it looked like a really good short. It was exhibiting a bear flag. But lo and behold, we actually got stopped out. So let me explain to you why. And looking back at it, I would short this stock again if I had to, okay? Because it was acting very, very weak. So let me just show you guys what happened. Okay, and luckily, what I did is, actually, I'm going to change this. I actually split the order into two positions. So remember I said to you guys, I want to short right here. This is what's called a bear flag. You got this pole, you got this flag here. And typically what happens is you look for it to break below 34.20, and then you look to short and utilize this as your stop loss. Well, because I saw weakness and I sensed that the market was heading lower, this would be a good short. So I entered in the position at 34.90. Okay, with a stop loss at 36.05. This way, I can build a start position here and then add if it went lower. And what happened was it actually triggered at 34.85, and since that day, okay, it was acting actually quite strong, and only Friday and today that it actually went below this 34.20 level. Okay, so it triggered me here and couldn't go lower, and then got me stopped out right here. Okay, so in fact, close a third position. So I want to do this. So it's actually divide by 2 because I split into 2. So we can see only took a loss of minus 1.65. Okay, because I split the positions into 2. So you guys can look to utilize this type of strategy where if you're not sure, like you want to get in a little earlier, but you don't want to expose yourself or wait until confirmation, what you can always do is, let's just say, I think I said last week, if you're planning to short 1,000 shares right here, short 500 here, and then add additional 500 here. This way, you minimize your risk, because if you shorted here 1,000 and it stopped you out here, you would incur a bigger loss, obviously, if you were shorting a small number of shares. This way, it's a conservative way to get in a little earlier, but also allows you to minimize your risk. Okay, and this is the reason why instead of incurring a loss of 3.1%, I only incurred a loss of minus 1.6%. And you can see here, it has not been a great market to trade. You can see my last, actually 1, 2, 3, 4, I'll include the last, my break evens as well. 1, 2, 3, 4, 5, 6. My last 6 trades, okay, have either been break even or losers, okay. And lo and behold, I have 1, 2, 3, 4, 4 losers, 2 break even, and only 2 winners. Okay, my winning percentage is actually quite low, but yet I'm still up 10%. Okay, so hopefully this is a good lesson for you. Is it's not a matter of the number of trades that you are profitable. It's when you are profitable, you want to make big returns. Okay, and the biggest one was here, 11.97%. This one, or actually, if you think about, yeah, this one trade, 12%, basically covers all my losses. Okay, minus 1%, minus 3%, minus 1%, right? Minus 1.6%. So the key is not, in terms of making money in the markets, it's not about trying to have the most winners. Is when you win, you want to win big. When you lose, you want to lose small, and you also want to protect yourself. Okay, that's why I put down break even here. Okay, so this is again good lesson for you guys to learn that I've made 2, 4, 6, 8 trades. I only got two winning trades, and yet I'm still up 10%. Okay. All right. Let's get into some symbols that you guys want me to take a look at. All right, Vikash, hello. Hey, Sherry, hey, hello. Uh, Sherry, what do you think of FRC and BTC? Okay, so FRC is the bank, First Republic Bank, which was down 70% right at the market open. Okay, first of all, whenever I see this, look at this collapse. This stock from 120 all the way down to as low as $20 today. So first of all, in my opinion, if you are looking to trade this, either buy or sell or short, first of all, shorting, it's probably not worth shorting because it's fallen so much. If you're looking to buy, it's also very risky because it's going to depend on the fundamental news. Now, I'm not following the news very, very closely, but I assume that First Republic has been bailed out by the FDIC or by the U.S. federal government, and hence there is a bounce. If not, they'll probably go to zero. Okay, I think it's a bit risky to trade because it's all based on news. Let's just say, for example, tomorrow there's some new negative news. This stock could be much, much lower. So it's quite risky. But I mean, you can trade it, day trade it. Okay, and if I were to go into a 5-minute chart, right, you can see there is a lot of volatility. At the market open, went went as high as almost $30, went to 715, 1750, went to 35, right, basically a double, and then went lower, right? Now you could say, well, let me buy here and then try to hold here. Well, look at all these gaps here, mainly because there was a halt. Whenever the stock moves up more than 10% within a short period of time, the stock actually gets halted. So you can see there has been quite a number of halts. And actually, it was halted right at the 5 minutes after the market opened as well. Right here, you can see that's why it never traded. Look at, there's no volume. Okay, so if you are not an experienced day trader, I would suggest you don't trade this. Okay, even if you are planning to swing this, it's very high risk. Okay, but high risk but high reward. You can see it was halted here. There's no volume here. There's no volume here, and right here, no volume. Very high risk. Okay, Vikash, DXYs. Yeah, I was talking about DXY, the dollar index. So dollar index, if you look at the overall structure, Short term, it's on the downside, and I probably can see it heading a little bit lower. So might come back to test this level here around 101 ish, especially if the consensus is for the Fed to next week put a pause on interest rates, because a lot of the rise in the US dollar has been to fight inflation, and to fight inflation, they have to essentially raise interest rates. But we've broken down this structure in November, and we kind of climbed back a little bit here. But overall, short term wise, it's probably heading more on the downside. Okay. All right. Share says swing trade. How many days, weeks is a swing trade? Well, if you get into a trade and you're trying to swing it, as long as the price keeps going in your favor. Sometimes it could be just 2 days. Sometimes it could be a few weeks. Sometimes it could be a few months, right? So it depends. A swing trade meaning that generally you hold on to it overnight at least, and you try to ride it in one direction, either up or either down. But generally, if you were to ask me, well, what's overall average in general, it's usually at least a few days to a few weeks. Okay, but sometimes I've held on to some swing trades for several months, because let's just say I get in right here. Okay, well, as long as it keeps going in my direction, I'll just keep holding it. Okay, this one lasted what, almost 6 months. Yeah, gold and silver went up a lot today. Yeah, mainly because US dollar. Okay, we've got some more time here, a few more minutes more. Uh, Actually, why don't I do this? I'll give you guys a little bit of a sneak peek at something that I am going to be doing. Now, since the market is quite volatile right now, I've actually, the trades that I've been making personally, which I haven't been posting, mainly because the trades that I post are mainly swing trades. I've been doing a lot more day trading, mainly because of the volatility in the markets. And what I actually do is I'm going to share with you what I did this morning. So this morning I was trading Bank of America, BAC. Okay. All the US banks have basically been falling very sharply, mainly because of what's going on at Silicon Valley Bank and a lot of the regional banks. So there's a lot of fear that we could have another financial crisis. Okay. And particularly, if I'll show you guys, those who did not remember or did not trade the financial crisis in 2000 and starting in 2007, okay, right here, bank stocks fell off of cliff. Bank of America hit a high of around $55 at the low on 2019 in February, March, hit a low of $2.50. So that's why, even though some of the banks are, or Bank of America is not affected by what has happened at Silicon Valley Bank, people basically sell first and then ask questions there. So they fear that it's going to be a financial crisis. So hence the reason why Bank of America has fallen very, very sharply, okay, past few days. You can see right here, broke 33 all the way down to 28. All right, so I'm going to share with you what I did this morning on a day trade. Okay. Now, Bank of America. Okay, this is what I call kind of a basing type of pattern. Okay. Now this is a 1 minute chart. Okay, so it's very, very short term. This stock is very, very volatile. So there are several things that you can do. Okay. You can go short or you can go long. Okay. Generally, what happens if you are an aggressive day trader, a stock gaps down, you basically want to continue riding the trend down. Okay. But what you want to do is, before you determine where the levels, okay, I mean, obviously you can look at previous levels, okay, but the most reliable is actually what is going on this morning. All right, so if I were to go right here, okay, right at the open, went down. Okay, usually I don't trade the first 3 minutes. Let the volatility, I mean, it's going crazy. Then you see wicks here. It can't break 28.50, right? Tried once, tried twice, tried 3 times. And typically there's a strategy of what we call gap and go. It gap down, keep going lower. Okay. Now this is not a strategy for you got to be quick, okay, and you got to know what to do and you know where to put your loss. So what you do, since you identify support level, this is what we call gap and go. Gap and then continue going lower. Okay, if it breaks below 28.50, you get in short. You look at the high candle here, which is 28.70, right here. That's where your stop loss is. So you're risking 20 cents. Okay, broke. Okay, barely got stopped out here, barely, and you've been able to ride it lower. Okay, and in this case, you risked 20 cents. It went as low as 27.90, so you would have made 60 cents. So that is risking 20 cents to make 60 cents, 3-to-1 risk to reward ratio. Okay, excellent trade, excellent trade. Okay, now I didn't do this, okay, but I just want to show you that. The one trade that I did make, okay, is I was looking to go long. I was looking to buy, okay. Now, when I look to buy, what I want to see is where are the level of support and where are the levels of resistance. So right here is another level, okay. Hit here, can't go lower, bounced off, broke down. Okay, so now I know that this is a resistance level. Went lower, went lower, went lower. Now it went up here. Tested this, 28.20, went lower, can't go lower. Then break right here, okay, and then broke out. So I got in at 28.20. Now in general, where do I put my stop loss? Okay, now this is a type of trade where it's either going to work in my favor or not, because it's basically going on a downtrend, right? Mind you, it broke uptrend or downtrend right here. But I risk it only 10 cents. I didn't want to go to put my stop loss all the way down here, because that meant that I had to basically put a stop loss of 20 cents, 14 cents, 34 cents. Okay, this is way too wide. Okay, so I put it right here. So not 0.07, but I basically put it at 28.10. So basically risking 10 cents. And my target was right here. Okay, it's just looking for it to go from here all the way to here. And you know what happened? Just only 10 minutes. Reached it. Exited at 28.90. So I was essentially risking 10 cents to make all the way 28.90 from 28.20, 70 cents. 7-to-1 risk to reward ratio. Excellent trade. Now, if you look back and you're thinking, oh, maybe I should have held. Okay, look at this. It went higher. Went as high as 29.70. Went additional 80 cents in my favor. But we don't know. And to be quite frank, this was quite an aggressive trade. It's not, because again, it's still going lower. I was basically looking for the reversal. So my target was right here and it reached it. You can see here, it went down a little bit lower. Again, who knows, right? You're trying to obviously look at it's easy to look back, look at the future. It could have gone lower, right? And then I would have lost my profit. So in any day trade, okay, in day trade, you're not trying to predict what's going to happen, okay? You can say, oh, I should have sold here, now it's down here, right? You don't know. So now it's lower than the price that I sold it at. So the purpose of day trading, okay? Purpose of day trading, identify your entry, identify your stop loss, identify where your take profit is, make sure it's at least 2-to-1, and in some sense, preferably 3-to-1. If it's a 3-to-1 risk to reward ratio that you're taking and the trend is going in your favor, That's a good trade. All right. Hey, Nathan. Hey, Joel. All right. Thank you all for attending today's session. Just want to let you know, if you guys want to work with me, you can apply to work with me at activetradersacademy.com. I am going to take the next 2 weeks off. Looks like the market is very, very volatile, so I'm not going to. There's not a lot going to be a lot of swing trading opportunities, and essentially I'm going to be traveling for the next several weeks. So I will keep you guys posted whenever I host any of these Trader Live series with you, and look forward to speaking with you guys soon. Enjoy the rest of your week. Take care, everyone.